Hello, everyone, and welcome to the latest Tech Southwest Roundtable. Today, we're going to be looking at the Southwest startup scene, reflecting on 2021 and looking ahead to some of the exciting prospects in 2022. It's been an eventful year, to say the least, but I'm sure there's more to come next year in terms of talent funding and all the great things going on across the Southwest. My name is Peter Evans. I'm a journalist and consultant. I spent nearly a decade writing about technology and startups, mostly for the Sunday Times in London. Earlier this year, I moved back to Plymouth, where I grew up, and am now the editor of the Southwest Tech Daily news site, which is run with Tech Southwest. I'm going to ask the panel two very brief introductions, and then we'll kick off with some questions. So, in the order that's on my screen, Ben, would you start with a quick introduction, please?
Yeah, sure. So, hi everyone. I'm Ben Cooper. I'm the funding and support lead at Tech Southwest, but also consultant working with startups and scale-ups, and an active angel investor.
And Matt.
All right. So, hi everyone. I'm Matt, co-founder and CEO of Paranimo, and we help technology-driven companies better understand and improve their mental well-being.
Great. Sam?
Hi, good morning, everybody. So I'm an exited founder myself. I'm founder of FounderCatalyst, a site which produces all of your legal funding around paperwork, and I'm an active angel investor as well.
Great. Magda?
Hi, I'm Magda King. I work for King Recruit, and I'm heads up the technical division here. We work with the startup and scale-ups and help them to build their teams and sort of their own recruitment strategy, their culture, and everything around people.
Great. And finally, Jonathan, who is it? Bristol Templemead Station, I believe, live.
Great. Thank you. So my name's Jonathan Gaunt. We work with startups and scale-ups, helping to build out a finance team. So effectively providing them everything they need from a finance team perspective. I'm also a founder myself, having built and sold a business, and so I'm actively involved in that still as well.
Fantastic. So it's a great sort of array of talent and experience today. Ben, I'm just going to start with you, if you don't mind. Tech Southwest has just completed the first year of the Startup Studio Accelerator. Just tell us a bit about the program, why it was developed, and what the outcome was, and then just after you've done that, just talk a bit about 2022 and your what you're looking forward to there.
Yeah, sure. Yeah, you're right. We've just actually finished the second cohort for this year. So this year we've run two cohorts of a total of 19 companies. So the Startup Studio was, I suppose, came to my mind, and spoke to Tech Southwest, or Dan Pritchard at Tech Southwest, about a virtual accelerator, because we're in the midst of COVID, in lockdown. I think research and anecdotal feedback from the community was that the tech ecosystem was that there was a lack of support for early stage or pre-revenue or pre-seed companies in the Southwest, and so we decided that we would try and bridge that gap by launching a fully virtual intensive accelerator program. We ran our first cohort in spring, which was successful. Great feedback, and so we obviously came back again for another go this autumn, and again feedback has been very positive, both from the cohort but also from our partners and Activate, who run the program for us. So, like I said, we've got 19 companies. The objective was to get them investment ready and to raise investment. So for 2022, we're looking to expand or improve the program again, run the program again. I'm really excited about the opportunity to do that, but also how we can build the program out to support them and potentially more scale-ups as well. So really expanding program, really excited about next year.
Exciting times, yeah. And I think getting getting startups investment ready is so crucial, particularly in the Southwest, because I think that's somewhere where we are improving and need to continue to improve. On which note, I think it's a good time to ask Matt, who is a graduate of the first cohort, is that right?
I am, that's right.
Yeah, just tell us a bit about your experiences and a bit about the business itself and where you are on your journey.
So my experience, I thought it was really, really useful. So often when you're working in the startup, you're working in the business, not always on the business.
Yeah.
So it's a great chance to take a step back and go, okay, where are we going? Let's retest our assumptions. You know, the whole business model canvas, value proposition things have been really useful to go through again. Also, I'd never created a pitch deck before. I thought I could create a pitch deck. Then when you realize what actually people are looking for, and having the practice to do it, because since the startup studio, I've done a lot more pitching. I've actually won 2 pitching competitions now, but my first exposure to pitching was the startup studio. So I've had like a really, really, really good time on it.
Just tell us very briefly how the startup studio helped you refine that sort of pitching skill, which is so essential.
So when you're told, so you've got 5 minutes to pitch and that's it, do it in 5 minutes, that's it. It's like, okay, I'm gonna learn how to do it in 5 minutes then. And having that sort of, I guess, that deadline for sort of pitch day, I was very nervous about it. It was really nice that one of the people that I spoke to after the event said that, not to be a bit like of an ego trip here, but saying I was like one of the best pitchers. But I think the only reason I was as good as I could have been is because of the coach I'd had throughout the whole program. So obviously what should go in a pitch deck, how you should present it, how to keep your points succinct. It's a practice, it's a skill you have to learn.
And not something you necessarily think about until you come to actually do it as a founder. Right. Good to hear. Sam, let's come to you, and this is sort of progressing quite nicely through the sort of ecosystems. So Sam's an active angel investor as well as a founder, as he said in his intro. So you must see a lot of startups that are seeking investment. Just interested from your perspective, where do startups get it wrong when they come to you looking for investment and interest, and what could they do better in 2022 to catch your eye?
That's a great question. Thank you, Peter. And do I have an hour to answer this? Because there's so much content. You can
write a book.
Yeah, exactly. Yeah, you could talk all day on this. I guess, to break this down into the top 5 or 6 items, number 1 would be, I see a lot of startups who just aren't prepared for the whole of the journey. They have got to a certain point, but they're not thinking about the next step and the next step and the next step, which is, for me, it's really frustrating, because actually the journey from having a bright idea and not being incorporated all the way through to closing your first funding round is really, really straightforward. It's well documented. We've got a brilliant guide to it. It's a really straightforward process, but you see founders kind of lurching from one point to the next when somebody asks them for something else. And what's frustrating is, and I speak for myself as well as other angels probably, angels get distracted easily. So they'll see an opportunity, and really, if you're a founder, you want to jump on that and get the opportunity nailed, rather than say, oh, right, I don't have my advance assurance in place, for example, I'm going to go away and do that. Because in the month it takes you to do that, the angel have found something else, that have used their tax relief, or they've spotted a squirrel and chased that. So, getting all of your ducks in a row, which is really, really straightforward. As I say, it's well documented, is really important. The second thing I've seen quite a lot recently is around one big raise. So people saying, right, I need 2 million quid for the next 3 years, and that will be my business done for funded. So I'm going to raise that all in one go. I don't have time to describe why that's not a particularly good idea, but it's not. What you need to do is raise a relatively modest amount at a relatively modest valuation, reach a proof point, so do something that proves and validates your business, and then raise a bigger amount, and then raise a bigger amount. And I know it's frustrating and it's time consuming, but that just is the way of the world. People who try raising millions on a first round, it's
why do founders think it's about one big raise? Is that a sort of Silicon Valley media sort of cliche of what it is to run a business, and people think that's what they need, or am I sort of over dramatizing that?
I think people just look at their forecast for the next 3 years and say, right, I know I need 2 million quid, so I'll do it in one go, rather than think that their valuation, the further they get down the line, the valuation grows, the more they can raise. And there is a question of dilution and not diluting too much. But the reality is people don't put £2 million generally into very early stage startups. So you're just not going to close your round. And you see, after a couple of months of trying, you see people realigning to, a more modest and standard £300,000 raise at £1.5 million valuation, for example. And but it just is frustrating to see people go through that journey time and time again. And it's just not market standard. It's just very rarely do those huge one big raises end successfully. And I guess the related point, the next point, was around valuation. People look at Silicon Valley and they see 10, 20, 30 million pound valuations for businesses that have a bright idea and a shiny pitch deck but haven't implemented anything yet. That does absolutely not transfer to the UK. And again, people who say, right, I'm going to do my first fundraise at £10 million. Now, there is very, very occasionally, do not say never in this game, very occasionally that happens. But in reality, Bowhurst produced some brilliant statistics. Your first funding round, if you've got a shiny idea and a pitch deck, is going to be at roughly £1 million valuation, up to £1.5 million. If you've got some traction, maybe a product in beta or an MVP or whatever, maybe your valuation goes from 1.5 to 2 million or something like that. But there are really standard levels that angels will expect. Having a 10 million valuation with no proof of traction, unless it's exceptional, and everybody thinks their idea is exceptional, I guess, but unless it's really genuinely exceptional, you're just not going to get it. The next point is around investor bingo, and we see this a lot. So everybody loves sprinkling a bit of AI and blockchain into their pitch deck, even when it has no relevance. And you scratch under the surface and you find out that either it's an aspiration or the founder doesn't really understand what those things mean, or it's somewhere 3 years down the roadmap. Now, personally, for me, I see that as a value detractor. It's a real turn off to see, if it's genuinely an AI company, then great, that's really interesting. If it's sprinkled on for a bit of magic dust to make angel investors, I will walk away out of principle, because it just says something about the pitch that it isn't good enough to stand on its own merits. Sorry, I am getting there. The next point is around complexity. And lots of people create unnecessary complexity in their early stage business. So, loads of subsidiaries, convertible loan notes, ASAs and warrants, loads of different share classes with slightly nuanced. Nobody wants to see any of that. Everybody wants a single business with a single set of share classes. So you know what you're investing in. Everybody's got the same rights. It's the SCIS and EIS legislation are really, really brittle, and it's really easy doing any of the things I've just mentioned to break that SCIS and EIS tax relief that investors really cherish. So, there's a motto: keep it simple, stupid, and all of that unnecessary complexity sounds bright when you're doing it. In reality, it's going to frustrate your fundraising.
And almost always doesn't help the founder. I would guess, the more you sort of complicate with trendy share structures, the less value the founder and the SEIS and EIS investors are likely to get, I would say.
It's just all unnecessary. And the last point you'll be glad to hear is around chasing VC cash during your first fundraise, which I see an awful lot of. Everybody, courts a lot of VCs, and VCs are, pretty generous with their time. They will have lots of conversations, which almost inevitably end in "you're too early for us." And there's been some brilliant statistics over the last couple of days. So in the last 5 years, the amount of investment from VCs in Europe, has gone from 25 billion to 100 billion. So a massive rise, almost exclusively, well, totally exclusively, in fact. The increase, the 75 billion, has gone to later stage businesses for raises less than $5 million. There's no increase at all. So if you're an early stage seed business, it's really, really, really unlikely you're going to take any VC cash during your first or second round. So don't get distracted by that. Focus on angel investors who are much more likely and are increasing their investment levels in your type of business.
Great, thank you, Sam. There's some brilliant tips there, I think, for anyone watching who's in those early stages of looking for investment. Right, we'll come to Magda next. Jonathan, we'll come to you after that. So Magda, a recent Tech Southwest talent survey shows that there's a huge shortage of talent in tech at all levels across the region, but particularly mid-range and senior roles. I'm interested in your thoughts looking ahead to 2022 about how founders find and attract the best people to fill those roles.
So obviously, I mentioned we work mainly with startup and scale-ups, and kind of setting up the mindset of planning for recruitment. It's not, I wake up in the morning thinking, I need 10 people now, and I'm going to have them. And so it's kind of planning step by step. At the beginning of the year, we started working with a few companies based in the Southwest, and they were aiming for the funding sort of November, December. But then we started the process from January, and we planned when we needed what talent, what stage, because obviously when they needed to recruit 20 people, so it's all the process of induction, them, setting in, achieving the level of technology. It's not going to happen overnight. So I would say we always say start planning, and that's what we would do with our clients, and preparing for them the right offering, looking at the salary benchmarking, and making sure that they are in the right spot. That obviously they don't offer, but they also don't under offer. So have the right offering. And we always say, be open for the new talent, because actually, as you mentioned, there is a shortage. So when a good candidate came across your way, just don't think, I will need them in 4 months, I'll have them in 4 months. Just start the conversation, even if you don't need. Just start the conversation, keep in touch, because when you need them, then it's a case of picking up the call and saying, hi, we will need you to join. So being kind of constantly looking and planning. And thinking what we need ahead, because there is a shortage. And also the open mind. Obviously, COVID, or the positive came thing from COVID is everyone's open mind to be open to remote working. So obviously looking at those different options.
Being flexible, I guess, with
absolutely.
Yeah, is that in your view the sort of rise of remote working? Is that potentially a positive for somewhere like the Southwest, which has historically struggled a bit to recruit the real top talent?
Absolutely, it is. Depends, for example, what you're looking for. If you're looking for based in the Southwest, but you're looking for AI talent, then you more likely find them towards London, Cambridge, because there is obviously a big university those talents coming from. So yeah, definitely looking, because in the past, the companies in sort of London area, they were more flexible to remote working, and they used to the salary offer much higher than we were Southwest. So all this talent, although we had a great talent here, they were drifting towards London or any big cities, because they could work remotely. Yeah. And now it kind of, those lines got really, this line disappeared, and very often candidates from London, they really keen to work, because we have a great companies here in the Southwest, and now they have, obviously the offering is very competitive here, and we can reach out to this talent.
Yeah, that's encouraging to hear. And Jonathan, coming to you, and hope you're not too cold. In your experience working with startup and scale-up businesses in 2021, what were the key areas they needed support on, and how do you look ahead to 2022 and see that panning out?
So I think where we see a lot of them needing a bit of help is around the confidence in finance. So It's almost that bit, as soon as you put a pound note in front of something, everyone starts to get a little bit scared. I'm not sure, I'm not good with numbers, I'm not good with finance. And so what we're seeing more and more, it's about actually, okay, can you tell the story? So the ability to be able to kind of tell the story with some real kind of depth, it's then very easy to start attaching numbers to it, and then kind of building things with the story behind it gives them a lot of confidence then around, actually it's not as difficult as I perhaps thought. I think that also then leads on to almost everyone thinks it's so much easier. So I'm going to start my business. I'm going to have 100 customers in the first month, and then 200, and then 1,000, and I think it's also then that bringing an element of realism to what they're doing, so that actually they've got. I always think it's great of how do we play in a spreadsheet? How do we make mistakes in the spreadsheet? Yeah. So that then when you get into real life, you've got some idea as to where you're going. So I think that's where we're seeing more and more people needing support, is around that forecasting, but we bring it back to storytelling. If you can tell me the story, we can then turn that into numbers. and then we can then play around with the numbers in a spreadsheet to sort of say, no, you need twice as many customers, or yeah, you haven't got the amount of raising, the amount of funding that you kind of need, or what happens if you had to delay everything by 6 months. And so I think that's the bit of encourage them. How can we test more within a spreadsheet?
Yeah, that's really interesting. I guess it reflects a bit what Matt was saying about not, you've got an idea for a business and you go all out on that, but you've not really thought about how you sort of frame that idea and pitch it to people who know what they're looking for, but you don't necessarily know how to articulate it. So I guess that's what you're doing.
Yeah, absolutely. And I think it can be a solid foundation that you can build everything else on, because it's almost then starting to think about, well, okay, at what point do you need dedicated roles? So again, it can help you from a people plan.
Yeah.
Right. Okay. How many customers? How are you going to support those customers? Okay. And then you'll see founders that, yes, in early days, the founders are doing lots of roles themselves, but actually at some point they've then got to start giving some of that work away to almost kind of like dedicated roles. And so a plan built in a really well crafted way can help to kind of give you that sense of, oh, this is what the next 6 months is going to look like from all of the various aspects, and just give you a degree of confidence. And that can also be confidence of, we're going to run out of money in 12 months' time. Yeah. That's good, because that still gives us time. So I think that it's that, how can you be aware of your numbers? Don't be afraid of them, embrace them, and then start to kind of really understand the dynamics behind them.
Yeah, great stuff. I think any founder listening to this could pick up some really interesting nuggets of information. Right, a few more things. Ben, I'll come back to you. One of the big sort of news stories from the sort of startup perspective this year was the announcement of a £200 million British Business Bank fund that will be debt and equity and will be available to startups through the region. What's your view on how that will sort of look on the ground, the timescales and the importance of it in general for the Southwest?
Well, I think the obviously the initial reaction is obviously it's extremely positive from an investment point of view. Obviously, it's Cornwall have had their own fund, £40 million fund for a few years now, and that's being deployed in a positive manner, and they've seen positive results from that deployment. We've seen other funds in the other regions, and particularly in the Northern Powerhouse Fund, be deployed in a similar sort of way. So it's great that I think the government and the British Business Bank have recognised that the Southwest needs that support. I think it's great because it not only will encompass Cornwall once they've used their current fund up, but it will be covering obviously the full sort of government region of Southwest, which is Cornwall, Devon, Dorset, Somerset, North Somerset, Bath, Bristol, and then all the way up to Gloucester. So it's a big area, and so it's a chunky amount of money. I think the key thing to bear in mind though is it's going to take time. I think the feedback from British Business Bank at the moment is it could take 12 months to set the fund up. As you say, it's going to be a split between equity and equity and debt. I think it's probably likely to be down the middle. Yeah. And then I sense what will happen is that, as it has in other areas, is that that the equity side of it will be run by a couple of managers with different mandates. So there'll be, hopefully, fingers crossed, there'll be a significant chunk of that money directed at pre-seed levels, because that's where the gap is. And I think Sam, actually, you shared on LinkedIn yesterday, I noticed you shared a graph about VC activity. And the interesting things about it was it's about a 5-year graph, I think it was, or chart around in what types of businesses VCs are investing. The striking things was I think funding's kind of almost doubled this in 2021, which was overall, which was really interesting. But one of the very interesting things was it's all going in later stage companies. Over that 5-year period, the proportion into early stage businesses has been relatively static. And that's where there's a gap in the sector. And so pre-seed money, and hopefully some of that 200 million will find its way specifically directed towards pre-seed money, because that's the area that we're focusing on with Startup Studio, but that's where the need is. And particularly, I think one of the things that the region need to understand as well is they need to get sharper at applications. They need to get sharper with their pitch decks. They need to get sharper with their applications for grants, for all these types of things. Otherwise, Bristol's going to swallow it all. And so, they are in competition with areas. So Bristol's pretty well served, but they will attract a lot of the money. So, Devon, Cornwall, Somerset, Dorset, all these sort of I guess less developed areas from in the tech ecosystem, they need to really up their game over the next 12 months. They've really got 12 months to get their act together.
Agree.
That when this money starts getting deployed,
need to sharpen their elbows a bit and realise that the world doesn't end at Bristol.
No, that's right, absolutely.
We've got about 10 minutes left, so that we'll quickly go through a few more things. Matt, just interested generally, how optimistic are you about the funding landscape for a business like yours in your sort of stage of development? Do you approach 2022 with sort of unbridled sunny optimism, or not quite? Just give us your thoughts.
I'd say I'm optimistic in terms of what we can deliver, my ability to pitch. But I think that one thing I've learned, and I think this is a real challenge for people in the early stage, is you need revenue often to get investment, but often you need investment to get revenue. Now, it's a cycle that whenever I speak to investors, it's an interesting one, because obviously in a pre-seed you are quite high risk, but of course investors are therefore trying to find opportunities that are less risky. So it always seems like an unusual balance between the two. So I really think I think personality plays a big impact in it. So what I mean by that is, it might be a bit of an opportunity that may not have as much revenue as you might like, but if you really believe in the founders and things like that, you might get the investment. But I think as both Sam and Ben have said, there's definitely a gap in that pre-seed thing. And Sam's also making a really interesting point, something that we have learned as well. So one thing you were saying, Sam, is why is it that founders ask for a big amount of money and then rather than break it down? And I can answer that from experience. So when we were asked to raise money, we were raising to achieve the vision, the end goal. This is what it's going to cost, was actually, and this is a mindset that we've had to learn, is break it down. And then what do we need to achieve the next step towards the vision? And that's actually a different raise amount. And that's a big learning that I have from this. So I think I'm definitely optimistic. I've got, there's obviously a lot of good groups, and we're actively fundraising. Now we've just launched a new SaaS proposition, and we are getting revenue. So we're in that nice revenue to get investment to get revenue type sweet spot. But of course, I think for other people that are struggling, the biggest thing I've noticed about the UK funding scene is the importance of revenue. Like, even though people talk about traction in terms of user signups and stuff, and it has value, but I really think if you can get that revenue, then you start getting a bit more attention.
I think, that sounds spot on to me, and it's a big difference here versus the US, isn't it? That sort of split. Sam, I'll come back to you in a second. Just Magda, one thing Jonathan mentioned that interested me is when you start to bring on dedicated staff as a startup or a scale up, and it's a big decision, isn't it? When you sort of begin to delegate some of those responsibilities as a founder, that you've done everything literally. And what's your advice to companies about when they should look into building their team, and what the advantage of doing that is?
I think you obviously pretty much from day one, you need to think, because you get into a stage that you won't be able to do everything yourself, and you need those people. And having those conversations at the very, very early stages with anyone that come across your way, because as you mentioned, shortage, yes, and you feel the shortage when you go into the panic recruitment. If you plan that and you have those conversations constantly ongoing, you don't really feel that shortage, because you constantly have someone around you. You have those conversations. So definitely from there, pretty much day one, start the planning.
You should start thinking. And Jonathan, if you don't mind just expanding on that, because it was your point originally, how important, I guess what I'm trying to say is, when should a founder realize, or co-founders realize, that they need to bring specialists into the business? Is there a sweet spot, or is it just as and when it becomes apparent?
I think it kind of comes back to the ability to be able to kind of line up what are all of the jobs that you do and what are the ones that you have to do. So, for example, you have to do the fundraising because people are buying you, yes, and you need to be in front of them. But I think there's almost this element of, well, I can do that, therefore I will. But if you're saying yes to something, you're also saying no to something else. And so I think it's really important to kind of understand what are the things that you must do, and then how do you then start to take some of those other pieces away so that you can focus more time on the really important stuff. And we see it all the time. Yes, anyone can do finance, but they'll do it badly. Yes, anyone can build a website, but it will look awful. And I think it's that bit of really kind of understanding where your time is best spent. And also it's that bit of, yes, having the money to almost be able to, having an element of money gives you some confidence.
Yeah, great stuff. Right, Sam, just to finish off, I'm really interested as an angel, your views on the sort of sectors that industries or subsectors almost that we're likely to see get a lot of interest in 2022 and beyond. What sort of pitch decks are crossing your deck day to day that sort of form a trend that we could talk about?
There are lots of trends. Whether they're getting funding is a different matter, of course, isn't it? But there are quite a few businesses as a result of lockdown. So, food delivery, hyper local food, and kind of supermarket replacement services. We've seen lots of them. The funding traction has been challenging, I think, because it's really hard to kind of differentiate, protect, and there's lots of competitive pressures where Uber or similar businesses can kind of sidestep into that area. So we're seeing lots of businesses there. Whether they'll all get funded, who can tell? It will be interesting. I mean, there's no crystal ball for the previous fads of blockchain and AI being mentioned everywhere will hopefully continue to die out, and we'll see. It's great seeing genuine AI businesses, and there are lots of businesses where AI changes the dial. It will be fascinating. I think one of the other trends we've seen that's dying off is there's the kind of open banking integration and things like that, and lots and lots and lots of businesses there. But again, really hard to differentiate, a relatively modest barrier to entry, and lots of the ideas there are relatively early stage, so they're not as mature as they could be. So I suspect a few of those will survive and be really interesting. But yeah, that's kind of been a busy area.
Yeah, I guess it's just picking the best ones. That's
I think Sam also meant to add mental health tech as well as a really great opportunity to look at. I'll just leave that one there.
I did, but also, it's one of those areas that there are quite a few businesses, I think, in that area as well. So lots of competition, and the problem with having lots of competition, as you'll know, Matthew, is if you see 10 applications, I won't pick on mental health, but on food delivery or whatever, how do you pick across the 10? And actually, that if an investor sees lots of businesses in the same space, quite often they'll say, it's confused, I don't know which business to pick, therefore I'm not going to pick any of them. I'm going to go and pick something which seems more unique, if that makes sense.
It certainly makes sense to me. Right, I think we're done there. Thank you everyone for a great discussion, and have a great Christmas and a good New Year if we don't all talk before then.
That's great. Thank you very much. Thanks everyone.
Cheers, guys.